Ulta Beauty stock, ULTA, is down around 3 to 4% today following their second quarter results and cutting their full year outlook to around $24 per share in earnings. Notable value investor Warren Buffett. Happy birthday, Mr. Buffett, if you're tuning into the Unrivaled channel. He was a noted buyer of Ulta in the past quarter. It's a tiny position for him, but it is interesting to see that he's seeing value in it, perhaps because the stock has roughly gone nowhere for the last 5 years, roughly break even over the last 5 years, despite the fact that the underlying fundamentals have continued to improve. You can see how, yes, there was a COVID impact where, folks said, hey, I don't need to wear as much makeup. Maybe I'm going to use a Instagram filter instead or something like that, and use a little AI to look a little bit better. But outside of that, you do have this sort of steady march in terms of cosmetics, and Wall Street was expecting continued growth in the years ahead. And, looking at the free cash flow profile, pretty similar. You do get some lumpiness, but overall, you're talking about a business generating around $1 billion plus in free cash flow per year. Looking at the business itself, you're talking about a brand, Ulta Beauty, that has around 1,400 retail stores across the United States, carrying around 25,000 different products, different brands, stock keeping units. So you have these big stores, 10,000 square feet, carrying a lot of different brands. And you can see most of their sales are tied to cosmetics. That's 40% plus of their revenue. Another 19% is skincare. Another 19% is hair care. So you can see quickly these top three represent the lion's share of this business. You do have additional services, salon type services, but this is the small fraction of the total when you're looking at the big picture. Thinking about this business, it is interesting to see that they've been steadily adding new stores each year. So suggesting that, hey, they're still filling out their footprint, a couple percent more each year. Now it's around 1,400. So I wanted to know, has management indicated how many stores they can open up over time? This is something that they might mention in one random transcript or sometime in the last few years. Do they have a long-term goal? Also, is international expansion another potential driver? So this is just something I quickly want to know. I personally use AI Ticker Chat. I'm one of the co-founders, and chatting now is completely free. So feel free to check that out if you're interested. So this is an example of chatting about Ulta Beauty. And the answer is that yes, I can go to the source documents if I'm interested, but yes, management has effectively said 1,500 to 1,700 freestanding locations in the US. So versus the 1,400 base, you're talking about 10, 20% potential growth there, but they're also talking about expanding into Mexico over time. So that could help accelerate their growth. But looking at their second quarter results, I'd say broadly kind of stinky. Net sales increased 0.9%. Investors clearly were expecting more. Comp sales, so this is talking about the, effectively their mature store base as well as their e-commerce sales, that actually decreased. Investors don't like to see that. This was driven by a nearly 2% decrease in transactions. This means shoppers are effectively purchasing less, and a 0.6% increase in average ticket. This has been a trend that you've now seen with a few different retailers where they sort of have this challenge of, look, we need to raise prices to deal with inflation. But as you raise prices, ultimately you do have the effect that the consumer, their wallet hasn't caught up. And so, they can't buy as much luxury goods. And this has been a key aspect that management actually calls out on the call, not only the challenged consumer, and you've seen that with sort of lower tier, stores like Dollar General recently, which also, the stock fell something like 30% this past week. So you're seeing that dynamic in retail broadly, this inflation, sort of squishing the consumer and making it tougher for the retailers to prosper. And so you see gross margins. Okay, so they're passing on inflation, but ultimately you have lower merchandise margins, so their gross margins decline. But then you still have to pay your rent. You still have to pay your general and admin expenses, the sales force. And so as a result, your costs as a percentage of revenue increased because, the sales aren't growing enough and their margins are declining. And so looking at this, you're looking at their profitability, their operating income dropping to around 13% net of sales versus closer to 16% last year. A sizable drop in earnings per share. So this is why you're seeing this outlook cut for the year for Ulta. This is why the stock is down. And management gave a bunch of reasons why. And so once again, going to AI Ticker Chat, I go, in the most recent quarter, list the reasons that the results stunk. And, these are just the top couple, which is that management called out, which is growth is normalizing after 3 years of significant gains. They're talking about increasing competitive intensity among the beauty category. So that's a direct quote. And this is important to call out because that's always something you want to dig further into if management's talking about, like increased competitive intensity. Does that mean you're potentially losing market share to someone else? And during the call, management effectively said, look, there's a couple of different tiers within beauty. There's sort of the high end and then there's mass appeal. And they're suggesting that they are losing share in some of these categories. I believe some of the higher end tiers, but sort of mass they're holding on. So, that does reflect, look, competition is a real thing. That means it's not, in my mind, I want this sort of the unrivaled story where it's very clear this is how you're going to win over time. And this makes the story harder ultimately when you're saying, hey, competition is sort of eating your lunch. But I will talk about just a second, what does Buffett see, or what does his lieutenants at Berkshire Hathaway see? I believe maybe it's Todd Combs see in this. Another excuse that management called out for why their results stunk during the quarter, seeing an earnings decline, was they had a disruption from their ERP, so that's their enterprise resource planning system, which led to disruptions in their store inventory allocation. So that impacted sales. They also talked about how and this is, if I were to keep going through this list, management talked about their marketing plans didn't quite work out and didn't have the uplift that they expected. Okay, so what are my thoughts on Ulta? First of all, in full disclosure, this is not financial advice. Also, quick plug, recently, Robin, a premium member of Unrivaled Investing, commented, this is a direct quote, I'm an extremely happy customer of Unrivaled. The information services you provide to me are invaluable. This follows another subscriber posting on how, and this is another direct quote, I'm currently ahead of my investing goals to retire at age 45. Thanks to Unrivaled. If you're looking for compelling investment ideas, come check out Unrivaled Investing. So thinking about Warren Buffett and Berkshire Hathaway and his lieutenants starting to buy a stake in Ulta. This is a classic Warren Buffett checklist. And maybe I'll make a whole separate video on effectively the two types of Warren Buffett checklists that are out there in my mind that he's publicly called out. If that would be helpful for you, let me know and I'll consider making that video. But this is a classic type of setup. Cheap, predictable, and being able to pencil out a reasonable return over time. And by cheap, you can see even though they've cut this outlook from 11.6 billion in sales to closer to 11 billion, comparable store sales going from low single digits to flat, maybe slight decline. They've kept most of their projections the same, except, earnings are taking a bit of a haircut from $26 per share to $23 a share. So you are talking about relatively cheap, around 13 to 15 times EPS. And personally, when I'm looking at something like this, what I personally want to do is I always try to size up management, and ideally I have founders. That's, you're not going to have that case here. So if you don't have the founders, you're going to say, hey, is all this capital getting returned to me? Is at least management extremely shareholder friendly? And so far their policies do seem to be friendly, where they're just buying back tons of stock. They talked about how share repurchases around $1 billion. I already called out they're already doing around $1 billion in free cash flow. So, that means the vast majority of the free cash flow is going to shareholders, reducing the shares outstanding. And, if you think the shares are cheap at 13 to 15 times, which Buffett does, then it's a nice way of reducing the share count by a couple percent each year. And the logic is fairly simple. If you let's say it's at 15 times going forward, valuation doesn't expand. At 15 times, if they take all their free cash flow and buy back stock, 1 divided by 15, you're talking about around 7% buyback per year. Ballpark. So then if you overlay that with the fundamental growth of the business, so you say, hey, what do I think net earnings could do over time? And let's say you layer on maybe another 5% long-term potential growth. That's, talking about their store base, talking about inflation, talking about new products, talking about Mexico expansion. So you consider that 5% plus the financial engineering of share repurchases, and now you're talking about a teens type of return over time. Low teens, not high teens, but low teens type of return over time. So you can start to see how a value investor like Warren Buffett could say, oh, okay, like I get this, this is why I want to buy it. Now keep in mind, Buffett has like nearly a $300 billion cash stockpile. He's been selling his Apple. He's been selling his Bank of America. So if he wanted to buy all of Ulta, it would be easy for him. He could buy it with the interest alone over time if he wanted to. But this is I sort of view this as he enjoys the game. His lieutenants enjoy the game, and it's just like, okay, I'll put on a small, a side bet, in terms of following this. Maybe we make a little bit of money. Maybe we make, 10 to 15% type of returns over time, in theory. So first is cheap. You can get that. Second is predictable. Women love makeup. I think that's not controversial. Hopefully I don't get canceled for saying something like that. But yes, women generally love makeup. It's how they stand out, oftentimes, showing off their features, and you want to look good. As you can tell, I wear a lot of makeup. No, I do not wear any makeup. But you can see, looking at their historic results, that even during the great financial crisis, this was a growth story, growing at least 10% per year. And I think that's important to say, just because that reflects the durability, the predictability of this business. That said, at that time, it was that growth story because they could continue to open up new stores. That's much less now because, as management's called out, they're closer to that ceiling in terms of what they could do with US. The question is, can you start, let's say, evolving with the riskier international expansion? Maybe they can deliver on that. So we'll see. The big decline was in response to COVID, where people were using more of those AI filters. Hey, I don't need it. I'm going to be on Zoom type of thing. Looking at the return framework, this is using AI Ticker Chat and the predict feature. And, this is AI. AI is saying, hey, this is based on reading the transcripts, based on reading, based on what it knows about the industry, what management has said. It's effectively saying low teens margins, single digit type of growth over time. And maybe you get to a market multiple, give or take, in the next 5 years, in which case you're talking about nearly 100 to 200% return over time, plus the cash. And I already called out that around 7% cash that goes to you each year. And so if you factor that in, even in the downside where the price doesn't increase that much, you are going to benefit because this cash is in theory going to go to you. And that could help juice the return. So this is, I think, why Buffett is buying this, has bought a little bit of Ulta stock. Personally, I think these assumptions are a little too, in some cases, a little too aggressive. So I'm going to tweak it myself. And so I'm going to put in my own assumptions of only 2 to 6% revenue growth compounded over time, 13 to 15% margins. And I'm going to do a tighter and lower valuation range. Maybe I'm just more conservative. Maybe that's just my take. And I'm sort of getting closer to break even, and then, getting some upside of around 100%. It does get better when you factor in the cash flow that can go to shareholders. So it wouldn't surprise me if Ulta works well over time. I personally, given that the fundamental growth isn't really jumping out, and you're seeing that with negative comps, I personally am in the camp that these types of stories, especially with retail, who knows if you get a type of recession type of thing, if you have something like that, could you just get a crazy cheap valuation? So that's sort of my mentality. That said, it would not surprise me if Ulta does outperform the markets over time, when you have this sort of framework. I just personally so let's say Ulta's growing, very slowly. Maybe you can pencil out 5% growth over time. And it trades around 15 times. Well, just this past week in my letter, I called out a company that's effectively at 15 times and growing closer to 20 to 30% a year. So obviously, that math is much more compelling long term. Obviously, different types of risks, but that's why every investor has a different journey. They figure out what's comfortable for them, what they're looking for. Anywho, I hope this video calling out Ulta has been helpful for you. Talk about ULTA stock, why it's down, why Buffett might in theory be buying it. And if so, please make a point of hitting that thumbs up, hit that subscribe button if you found this video to be helpful. Thanks so much for watching Unrivaled Investing.